Hello everyone, Glenn Tompkins here from our VectorVest YouTube channel with another video in our Stock Market for Beginners video series. Hopefully you've been able to get a better understanding about how to trade in the stock market. So far, we've talked about what investing is, why investing is so important, the benefits of investing, at what it means to own a stock. Now, we've covered all of these things thus far. We need to talk about what moves the stock market. These factors greatly affect the stocks that you buy and sell, and it's important to know how they could affect your investment. Let's first talk about how you can trade a stock. You already know what a stock is now, but how can you actually trade it? To be a part owner of a company, which is buying a stock, you need a means to be able to do so. You do this by opening a brokerage account. You need to purchase your stocks through a stockbroker. They're the ones that make the transaction happen. Now, folks, there's a lot of stockbrokers out there, and my comment to you would be to Google stockbrokers, and you're going to get a lot of them out there. Look around, find the one that you're comfortable with. Actually, give them a call, see if they'll help you out. Once you've found a broker, the next thing you need to do is to fund that brokerage account or deposit money. Now that you have an account and money, you can simply click on the buy button and place your order for the shares that you want. And then you're on the way. Your job now is to grow that brokerage account. Build capital by having your purchased shares go up in value. Once you make money in your investment, you can then close the trade, take the capital you've earned, and do whatever you want with it. That's called capital appreciation. That, my friend, ends up to being a good investment, and the goal is to do it over and over again. Now, keep in mind that investing has its own ecosystem. A company goes public to raise capital. You invest in the company because you believe in it, and when the investment has made you money, you can sell your shares to another willing buyer and then move on. I'm going to probably do a shorter video that walks you step by step in placing a trade with a broker. Now, let's talk about outside forces that can affect your trade. We covered this a little bit in the last video, but now we're going to dive a little deeper. For these examples, we're going to reference a pretend company. That pretend company is going to be called Glenn's Gadgets. I take my company public by an initial public offering or an IPO. I am trying to raise capital to grow my company. My company has a prospectus which tells you what my company is all about and my plan for the company. You feel comfortable with that and you decide to become a part owner of my company by investing in it. You now have purchased shares through your broker and off we go. Now you've done your homework, you've looked into the company, you feel comfortable with it. Now let's walk through what happens during the time that you own this company. Sometimes the prices go up, and sometimes the prices go down. There's outside factors that could affect it. The biggest mover of a stock's price is its ability to make money or the earnings of the company. Every 3 months or every quarter, Glenn's Gadgets has to report to you, the investor, how the company is doing. When I report that we're making money and growing the business and that my earnings are good, that will help to drive the stock's prices higher. On the other hand, if I'm not making as much money as I hope and the earnings are not so good, that will drive the stock's prices lower. I'm not so happy then, and I must decide on whether or not I want to continue being an investor in Glenn's Gadgets. Earnings helps to prove to everyone if the company is doing well or not. Let's talk about interest rates. Interest rates will affect the ability for a company to make money as well. Just about every company must borrow money at some time to grow the business. They may also have lines of credit, but even with that, they still must pay the money back that they borrowed. Low interest rates means that when I pay back the money, there is less on the repayment of the loan, which frees up money for somebody like me to do more. When interest rates are high, Then I've got to repay that loan at a higher price, and it makes it tougher for me to do business because it takes money out of my pocket. Money that could be used to grow my company by way of research and development, and also by hiring new people to grow my business. So high interest rates can affect the ability of Glenn's Gadgets to make or grow my money. This is all happening while you own the stock. Inflation. Now, this is a big one. Inflation is the cost of doing business. Inflation looks at the cost of goods, and it rises and falls based on supply and demand. When supply is abundant, inflation is going to fall. When demand is high, inflation is going to rise. When the economy is doing good and people have expendable cash, demand is high to buy goods and products, so inflation starts to rise. As inflation rises, the cost of these things rise as well. So, Glenn's Gadgets could be doing well as inflation rises, the cost for me to do that business increase, and it takes more money out of my pocket that I could be putting back into my business to increase my earnings. It really comes full circle. The biggest mover of my company is its earnings. Now, folks, that could be a lot to wrap your head around. So, let me say it this way. Glenn's Gadgets will do well as a company when I can make money, grow my earnings, borrow money and pay it back at a lower level, which is interest rates, and be able to buy things at a reasonable price to grow my business, which is inflation. The best scenario for Glenn's Gadget is rising earnings, falling interest, and inflation. And folks, that is what moves the stock market and how these things can affect your investment in Glenn's Gadgets. I hope this puts more things into perspective about trading, and until the next update for the video, see ya.